Friday the 8th of April, and we end the week up 76,000 Swedish crowns, and that brings us up for the year to 413,000. And as you can see, most of those gains are made from the two oil holdings in Chevron and Exxon, and also a sin stock in Altria, making up most of those gains. So in euro, this amounts to about 39,000 euro, or equivalent to around 42,500 US dollars. Taking a look at the return this year, we're up a touch over 24%, and if you compare that to the S&P 500, this year it's still around minus 6%. So in comparison, we're holding up quite well. Of course, the S&P went up in a bit of a rally in the last couple of weeks. We look at the different time frames here. We look at the month, we're up 6%. We zoom out a little bit over the 3-month time period, and we see again disparities start to emerge. And if we zoom right out to the trailing year, we can see outperformance. I'm up 44.7%. Just taking a quick look at the composition of the portfolio, and we see the two big holdings there in ExxonMobil and Altria taking up the two biggest positions. And further down the list, you see Microsoft, which is a position that I'm trying to build up, and I've been doing so over the last couple of months. So we see that financials is the biggest sector in my portfolio, and I'm actually trying to build that, specifically trying to build this sector up. Now, I'm not going to drown you with overkill of information. What I see is common is that there is a lot of content out there, YouTube guys making financial videos, and most of these videos are jam-packed with graphs and complex data sets and lots of tables and commentary, and it's all presented meticulously in a way that's not at all succinct. And when it's all said and done, these guys are barely keeping in touch or keeping up with the performance of the S&P 500. And so I try and stay away from minutia, because in amongst all the noise, it's very easy to get disoriented and get lost in all the details. And broadly speaking, I'm buying banks, I'm buying financial services, I'm buying majority in US equity markets. So for example, T. Rowe Price is a financial service company in the US. And I'm also picking up domestic markets in Sweden. I'm starting to build positions in Swedbank and also in Nordea Bank. Again, the broad theme is that we're about to go into a high interest rate environment. So this table here is an economic projections by Federal Reserve Board members and their individual assumptions going forward on what the monetary policy will look like. So if we focus down here where it says a projected appropriate policy path of the Federal's fund rate, we see the years that they anticipate what the appropriate policy would be going forward. We see the median numbers, and we also see the range. And so what's evident is that the overnight lending rate, the federal funds rate, is going to get ramped up, and it's going to get ramped up aggressively in a very short amount of time. And so this affects us how? Well, it affects us in a way that if the overnight lending rates that banks lend to each other becomes more expensive, then that cost will get passed on to us, the consumer. And this drastic tightening of policy is necessary because of the easy lending environments that the Federal Reserve had created. So this table here is the Federal Reserve balance sheet since the introduction of the quantitative easing as a response to the corona pandemic. And we see on March the 11th, 2020, there was $4.3 trillion on the Fed's balance sheet. Fast forward 2 years and we see the Fed's balance sheet balloon to $8.95 trillion. So that excess liquidity in the markets needs to be extracted so that the prices of goods and services are stable. But the excess liquidity also gets absorbed into asset prices. This is the 2021 Forbes Rich List. It states that 660 billionaires came into the scene, and of those, 493 were new to the list. That's one every 17 hours, and they improved their net worth by 86% from the previous year. tying this together, we know that the excess liquidity is going to get extracted, and with the tightening monetary policies, we know that the banks are going to be beneficiaries to this. We also know that owning assets is the best alternative in this high interest rate environment and in these uncertain times. Looking at the Forbes list, we see the vast growth that was experienced by these people on these lists, and none of this was malicious or nefarious. It's just the mechanism that occurs in the market. With the infusion of trillions of dollars into the markets, those with assets absorb that. So what occurred was a Pareto distribution, meaning 80% of the wealth was garnered by 20% of the people. Looking at the latest Forbes list for 2022, we see that Elon Musk is right at the top there with $219 billion. Elon Musk is $219 billion and topples Jeff Bezos for the #1 spot. But if we look at the 2019 Forbes list, Elon doesn't even get a mention, and the richest man in the world, Jeff Bezos, only has $131 billion. The sudden surge and the magnitude of the surge can be attributed to the excess money supply that was created by the Federal Reserve and the Pareto principle, Pareto distribution that occurred. So that's my plan of action amidst all of the uncertainty and all of the fear that we currently face in the world. I'm just going to keep buying assets, income producing assets, and riding out the volatility that's expected to come, and staying invested and keeping my eye on the long term and long time horizon, and not worried about the noise and minutiae and the movements of intraday markets. It gives me the time and the peace of mind to do things that I like, which is to train, to lay on the beach all day, and to pet dogs and view nice sunsets. At the moment, I'm in Nicaragua, and I've spent the last 6 months traveling fast and hectic through Mexico. So I think I'm going to spend the next two or 3 months here just to chill out, slow it down a lot, and take it a little bit easier.